students, myself, Linda Silvya, Assistant Professor, Department of Commerce PE, Nirmala College for Women's, Coimbatore. I'm taking a paper of Financial Accounting. Today, we are going to discuss about concepts of accounting. Meaning of accounting concept. It is one of the most important aspects of financial accounting. Accounting concept is the basic rule, assumption and principle which is considered as the basic of recording of business transaction and preparing the account. Accounting concepts are classified into 6 types, and it is the basic principles of accounting. The first one is business entity concept, and the second one is dual aspect concept, and the third one is going concern concept, and the fourth one is accounting period concept, and the fifth one is money measurement concept, and the sixth one is cost concept. Now we are going to discuss about the first one, business entity concept. Business entity concept says that business is different from owner and the owner is different from business. It is different, both are having separate identity and the both are having a different entity also. If company occurs any loss, that loss immediately mention only the company. That means it is limited only to the company. Your personal assets not to be entered into company or it cannot be destroyed. Whenever we enter into the transaction or into the account, we see that transaction in the company point of view only, not in the owner point of view. This is the concept of business entity. Dual aspect concept. Dual aspect concept is a foundation of and very important principles of accounting. For each and every transaction, there should be aspects. That means the 2 aspects. In accounting, we have 2 aspects. The first one is going aspect and the second one is receiving aspect. That means debit and credit. If you purchase goods come in and the money will go out. This is the example of dual aspect concept. Going concern concept. Going concern concept says that every business starts with an ambition. It will continue maximum for a long period. They want to do the business for a long period, not for short period. With this concept, they start the business. That's the reason we calculate the asset value separately in case of depreciation. They take the asset value, only the asset value, not the change in the market value. What is the amount paid during the time of purchase? In that only we can calculate on the asset, not the market value, because of ongoing concept. Suppose the company become insolvency. That time the company will be closed until the company will run. This is the going concern concept. And the next one is accounting period concept. In previous concept, we discussed about going concern concept. In that, company run for long period. Though it is run for a long period, we like to know that level of accounting. You like to know about the profit and loss of an organization. How we come to know at the particular period or at a particular interval. We have to calculate. You come to know that by this time we attain profit or loss, so that the reason we are calculating the period of accounting or preparing an accounting period or for a particular interval. Most of the time it will be 12 months. That means 1 year. There is 12 to accounting period or in the accounting concept. We calculate either in the financial concept or calendar year. Calendar year means from the month of January to December, or the financial year means from the month of April to March. Maximum of the company follows the financial year. This is the example of accounting period. And the next one is money measurement concept. Money measurement concept says that you have to measure all your transactions which are measurable only in the term of money. And how to measure all your transactions which can be measurable by the money only. Only in term of money, monetary transaction only you have to measure and you can take into an account. Non-monetary transaction does not have any kind of place in the money measurement concept. This is an example of accounting. And the next one is cost concept. Cost concept says that without measuring all the transaction aspects of cost only. What is the cost you paid for purchasing an asset? That cost only we have to take. And you know that whenever purchasing an asset, that value be increased or decreased, and there will be fluctuation. Does not make any difference in that accounting. That difference we cannot take. We do not take, or that difference we cannot take into account. Cost accounting says that the following only the original value. They follow only the value paid to occur the asset. That is the cost concept. We don't bother about other transactions. That means we don't bother about changes happening in the market price or changes happening in the price level. This is the example of cost concept. I hope it is easy to understand. Thank you for watching.